Hello everybody and welcome to this week's trading tips from Smack the Markets for week commencing the 24th of January. Now this week we're going to take a look at the trade of the week last week from the trading room, which was a trade that we took on copper. Now the trade played out as we expected, but that's not the reason why we're covering it here. So the way it's more the way that we managed the trade that provoked quite a few questions, and I think there's possibly a few trading tips here that we could share and that other people may get some use of. So let's take a look at the trade. It was a setup here on copper. It was taken last Thursday. We were looking for copper to go long. We were looking for this trading window here on the 4-hour time frame initially to play out. So we're looking for the market to move up to this sort of blue line that we established on the 4-hour time frame. Now when you look at this on the higher time frames, take a look at the daily, you'll see that there is also resistance. There is also a structure level right up here at 4,600, so it's much higher, and that represents this high here on the 4-hour time frame. So that's the second or the next trading window above. Now this is actually where the market did get to eventually, but let's take a look at the setup. So first of all, we've got the setup here. The blue line here, we can see that the market had broken through that level on the 4-hour time frame, so we'd got into the trading window and then pulled back to retest that level. So you can see here that we've got a good trend structure starting to form. Good geometry as well, nice series of high highs, high lows, and the market's just sort of pulled back into the moving averages here. So what you can't see here is that the trade is actually bracketed by pivot points as well. So underneath our stop and entry levels there are actually pivot points too. So we're looking for the market to bottom out here and to continue to move higher. So eventually, a bit later through the day, you can see that the market did rally on. It hit first target, it then moved up to second target here. Then we had some US news out and the market sort of pulled back, and at this point we were looking for price to put in a higher low. So when you're trading trends, we're always looking for the next swing. So we'd gone from a higher high to a higher high again. We're looking at when the market started retracing, the next thing we're looking for is a higher low, and the anticipation was that the higher low may well come in around the entry area, back into this level. Again, you can see the spike lower here, so the market, unfortunately, it spiked a bit lower, which meant that we couldn't move our stop up to a new technical position, so it's still stuck in the original location. Now eventually the market made back past second target, back up to third target, and up to fourth target. But then when it got up here, we had this quite sharp sell-off over this sort of 15-minute candle. Now once the market sort of sold off into this sort of technical level, this level also represented our third target, we started to get a bit of a bounce. I moved my stop up to this point here, right underneath that level, to lock in that third target. The reason being, and this is, I think, possibly a good time to take a look at the charts on the other metal markets, because my expectations, if we have a look at gold, and if we go back to that 430 candle, so this is the 430 candle on the same day, you can see that gold had sold off pretty heavily, and we weren't trading gold. And typically copper is not a highly correlated market to gold and silver and platinum and the other metals, but it does tend to correlate at some time. On the day that we were trading copper here, it was correlating with the other metal markets. So in other words, the other metal markets were running higher, copper was running higher as well, and we had this sharp sell-off here. The sell-off was much more severe on gold, as we can see, and the market never recovered, so continued to drift sideways and lower. If we have a look at silver and look at how silver reacted, this was the time here on silver. It's that 4:30 candle. We can see again that we've had a much more severe sell-off on the silver market too, and you can see that silver rallied on a little bit and then just sort of drifted sideways to lower. And we got the same story with platinum, and we just sort of go back to platinum. This was the move here on platinum. That's that 4:30 candle. So we can see that we had a sharp sell-off on platinum. Now I believe this was actually sort of just a news related knee-jerk reaction in the markets, which pulled all these other markets back, but I could see right across the board that all metal markets were selling off, and all of the others were selling off pretty hard as well, much harder than copper. So I wasn't really prepared to give back all of the profit that we'd made on copper so far. So if we go back to the sort of trade here, this was the pullback. So the idea here was to move the stop up, lock in the profit at third target. If the market bailed over any further, my expectations were that it was going to come back down to this structure level, and that's too close to the stop, and it's basically giving all the profit back to the market. And not only that, the trend would have changed by then too. So we can see that the market actually did rally back on, and eventually moved on to the, if we take a look, moved back onto the sixth target. And at this point here I decided this was enough. This is a good time to get out, and the reason being is that we're up to a pivot point here as well. It's sixth target. It was coming in towards the end of the trading session, so this was into sort of 6 o'clock in the evening, and you know, in the copper market, cash market was going to be closing, and of course we were going into the overnight session. So this was a good time to close. The other reason is that you can come up to the higher time frames, and we're very close to that 4,600 level. So we're very close to resistance. Had a good run, quite extended on these higher time frames as well, and that was a good time to book the profits. In hindsight, of course, we can easily look back and say, well, that was probably a good decision, because the market did drift all the way back to the original sort of breakout area, and also then tripped into the stop location as well. So it would have given all of that profit back on that trade had we not closed out at some point in time. So that's really the way that we traded this. Ultimately, when you're trading the markets, you don't know that the market was going to rally on for another 3 targets. All we can do as traders is to assess the markets, trust our analysis, get positioned, and then manage those positions. Risk management, money management is paramount in trading. It's one of those skills that saves us many times from poor trades, and also from giving too much money back to the markets. And at this point here, remember, I was quite happy to close out and actually book the trade at this point here. The rest of it really was just a bonus. So that's how we managed the trade. That's how we took it. That's how we managed it, and that's where we closed, and the reason why we closed where we did. Now, if you'd like to find out more information about the techniques that we use, and also the market reports that we run, then pop along to our website, and you can come along to the Smack the Markets website. If you scroll down on the home page here, you'll find our newsletters, but you can also subscribe to our newsletter here. And if you pop in and subscribe to the newsletter, we'll send you our market reports every week when we produce them. So that's it. I certainly hope you find it useful. Hope it's been given you some ideas, and look forward to speaking to you next time. Bye for now.